All right, everyone. Good to be back again. Good to see everyone here. Hi, good day. Thanks. Good to have everyone here. All right. Okay. So everyone can see my screen. Hopefully, everyone can hear me well. First thing I wanna bring attention is economic calendar. So let's do a dry run here on the economic calendar. We won't have too many things happening this week, all right, except for, of course, big data from US. Let me just correct my time zone. Okay, so today we had, I would say the most important one was at 2:30 when we had the RBA rate, the interest rate decision. Okay, it was widely expected that was 4.35, so a pause, and it indeed was 4.35. Okay, so we did have a pause from RBA. Just touching a little bit on it, it's most probably that the Fed will pause as well. We're gonna have a look on that later. But you know, from today, the interest rate was the most important one, I would say. As well, the core CPI from Tokyo was important as well. It came lower than expected. From now on, we won't have anything on Australian time zone. But if we look tomorrow, that actually, you know, it would be tomorrow morning, like 2 a.m., 1 a.m. We're gonna have the services PMI. Right, for the US. So that's very important to us. If we look at the services PMI for USA, this one, we can see that it's very, very minimal, very close to 50. Okay, so what basically means is when it's below 50 and is staying there for a long time, most probably we will have a recession on the economy. All right, both of them, manufacturing and the services PMI. So for now on, US is kind of safe as we are sort of trying to grinding higher above 50 here, above this line, right? So we are safe. If we look at the expectations, the forecast is to be 0.2% more than last month. Okay, pardon me, last October. So we had 50.6 in October, and now they're expecting 50.8 for November. So that means that we won't have any, you know, strong move here, but we will have a slightly up move. That won't change much. Okay, I can't say that, you know, 0.2 will make the whole difference. All right, if it comes as expected, don't expect much from the market. Okay, if it comes higher than expected, maybe a little bit of strength for the US dollar. All right, and then we're gonna have the ISM non-manufacturing PMI. That it's very important. Okay, this is the one that it's most important, I would say, as well as the jobs openings for October. All right, so pay attention on this one. Follow the same concept for the S&P Global Services PMI. All right, and then that's it. Tomorrow won't be much. Let's have a look on Thursday, because tomorrow is Wednesday. Yeah, so Thursday we will have not much things happening here. Well, ADP non-farm employment change, definitely keep an eye on that. And guys, let me just send a link to one of our friends that wants to join us, because he's having problems with the website. I don't know why. Just a second. Let me stop sharing my screen. As I've saying, so you know, pay attention on the ADP, because it's very important. It will give us how can I say that, the jobs openings. Sorry. Let me send it to him. Where is him? Where is there? Are you guys able to access the website fine? Is there any problem with the accessing it, or is it all good? Because is anyone from France? I think Lawrence is from France, isn't it, Lawrence? Are you having any problem with accessing the website? I mean the webinar part, because he's from France and he's saying that he's having a problem to access it. Anyways, I've sent him the link. Hopefully he joins us. All right. Oh, good. Germany. Sometime we do. Okay, cool. Anyways, so coming back here, let me share my screen again. Okie dokie. There we go. So, as I was saying, we just need to pay attention on the ADP non-farm employment, all right, as well as the ISM on here. Okay. Going back, we have crude oil investors. Not much to happen here. Oh yeah, definitely have a look on the GDP quarter over quarter, quarter three, and year over year for Europe. All right, definitely watch out those numbers. If it comes higher than expected, that will be very, very positive for the euro. Okay, and we may have further upside moves on euro dollar. Okay, I want to show you guys later something, but for now, let's go for this one first. GDP on Japan, that's good to watch. German CPI, definitely. And then Saturday, that would be most probably Friday for most of you guys. We're going to have the non-farm payroll. Okay. Now, going to the charts here, I want to show something very interesting that is happening with the US dollar. Okay. Right. Let's go for the daily. Okay, so we've started the year on here, right? 2023 here, right? So nothing much has happened on the start of 2023, all right? All the way to August, most actually September, nothing was happening. It was very range bounding here on the US dollar. All right. So very, very low. You know, are we going down? Are we going up? We don't know. So it was very consolidated. But then we did have this up move. Sorry, from yeah. So we did have this up move from July all the way to the top on October, and that was it. All right. So this whole move here, it's basically now reversing itself, let's say. Okay. And if we look on the close, on the opening of the year, that was, let me take it off this blue box. That was exactly on here. All right, let's call it here actually, because that one. Okay, so on this orange line here was the opening of the year at 103.660. Let's call it 660, right? And look at now, we are negative for this year on the US dollar. All right, we were negative. So that means that most probably we will continue to see US dollar falling down. Okay, maybe we will see to those lows somewhere here. Okay, around those numbers here. Okay, so I was pretty bullish on the US dollar. I think most of you guys have been following me for a long time. You know that I was I was expecting this was a correction to continuation up, but indeed we had we did had a higher trying to continuate and then broken the bottom and then retesting and now continuating lower. Okay, so that pretty much shows to me that we did have a reversal on the US dollar, and we may expect further downside moves to those areas here, okay, like that. Look, I don't have any crystal balls. I'm just, presenting to you guys what I think it may happen towards next year. Well, of course, towards this year, we're very close to the end of the year. And then 2024, quarter one, quarter two, until to quarter four. All right. With that, I want to bring the attention then to euro dollar. Okay, because let me drink some water. Because most of the things are actually working out to a more long bias on euro dollar. I want to show something here on let me stop sharing my screen. I want to show something. Let me first take it from here. Let me log in on here. Just a second, guys. Okay, let me share screen again. All right. Okay, so I want to show something from MUFG. Okay. MUFG. Here you go. For this one. Okay. And then I want to click on here. And that's pretty much what I want. I'm going to send these on the Telegram group. Okay. So everyone can read it afterwards if you want to read, of course. But this is the monthly foreign exchange outlook for December 2023 from MUFG. Okay, it's not any website, it's from MUFG. So what I will do is I will copy this and send on the Telegram later when we finish. Okay. Anyways, I'm gonna send it to you guys here. Oh, you're not on the Telegram group? Not a problem. Let me send you the link so you can join with us. Welcome to the family. Now, the key events, of course, for this month, they will talk about. But what I want to bring attention is basically on here, right? The forecast against the US dollar. So what they're doing here, let me take my pencil, not this column. Yep. What are they doing here is this spot close, of course, on November 30th of 2023. So November 30th, 2023. And then they are looking at quarter one, quarter two, quarter three, and quarter four of 2024. Okay. So very important to us is to already start to plan ahead what we will be trading next year and how we will approach the markets next year. All right. We always used to do these. The fund I used to trade for, we always was like, okay, so it's November, it's coming to an end. We need to already start to think what we're going to do next year. What's going to be the objectives, what's going to be the OKRs for quarter one, quarter two, quarter three, and quarter four. So making price modeling, I think it's the best idea, the best thing you can do to carry out those trades and minimize your risks towards closing of a year. And then always be sure to of course things may change in the course of the year. So it's not only it's not only a mathematics approach, it needs to be macroeconomics on the top as well. So if you have like I don't know, maybe like this year was crazy, right? We did have a liquidity default, we did have lots of things happening. So have those things in mind and don't be only a brick thinking. When I'm saying brick thinking is like always thinking the same thing and those numbers will get hit and that's it and that all. we all know here, I've been showing this to you guys, that institutions get the things wrong as well, right? Don't mess it up the things. Institutions do get things wrong because they are humans on top of all, and it's just market. All right, you can't predict every single little move the market will do. And this is what I've been trying to bring to you guys long time already. You know, how to have a better thinking. Anyway, so on the November 30th, we have this pot close on euro dollar. Remember, all of this is from USD. Okay, so all of those ones are from against US dollar. So forecast rates against US dollar. All right, end quarter one to end quarter fourth. Remember again, so this number, it's not that will be heated on quarter one. It will be heated on the end of the quarter one. So if it hits, you know, between on the middle of quarter one, that's fantastic, that's good. But bear in mind that this is should have or should be, I would say, the target for the end of the quarter four. Okay. Oh, sorry, quarter one. All right. So they are looking at 108 for quarter one. Okay. So if we just, you know, have a look on the chart here on euro dollar, it's trading right now at 108. So what that shows to me, it's kind of interesting. Hey, we may have a pullback. Where? Somewhere here. Right? Remember the box I've told you guys so many times. So do I see euro dollar as, you know, only long positions now? No, I do see some short opportunities. All right, especially when these ups downs here, is those breakdowns, it would be good to catch a trade all the way to here. Okay, and then on quarter one next year, we may have somewhere to long opportunities here to get back to 108. All right, so I'm just going to draw something, but it's, bear in mind, this is not something, you know, to follow it as it would be the, you know, the milestone of the trading. No, so this is the box, right, that we always talk about. We do have a much bigger box on here. So we may have two targets, the middle of this one, as well as the middle of this one. All right. Most probably, of course, we would be looking at, where's the brush? We would be looking at, you know, a break top, breakdown. So this is a change of structure. You know, somewhere around here, we may find good opportunities to short, and then we see some slowly moves down. We're not going to see something like this. Okay. Forget about that. We won't be looking at this because it's December, first of all. Second, this was very different. Okay, this was very different time. Anyways, so we may see slowly moves towards these areas and maybe a little push to here. Okay, maybe. All right. And then next year, we may be looking to long euro dollar towards 108 again. 108, 108, somewhere here. Okay. But then we look back, we come here and see what are they looking at. Quarter two, they're looking at 1010, and then quarter three, 112, and then quarter four, 114. So basically, if we're going to put it, you know, in a way, I like this game. Morgan Stanley's targeting parity on euro dollar, and Citi's targeting 104 during quarter one, 2024. Citi's targeting 104 during quarter one, as well as Morgan Stanley's targeting parity. Okay, I get back to this later. So here they're looking at 108, right? So that's MUFG. Right. And then they're looking at 1010, MUFG again. 1010. And then higher and higher. All right. But that's pretty much a good sketch already of what you guys can expect for next year. But going through the end of this year, would be very good, to get those opportunities. I would personally, all right, wait for short opportunities on euro dollar. Okay, I know dollar is not that strong, but we need to know that euro is not that strong as well. Okay, so just bear in mind that. And if we look as as a whole for days and days, euro dollar has always been down. Okay, always. Okay, always going down, always. All right, so just bear in mind. Apart from that, coming back to 1 hour. Okay, that's a very nice trade to have on the portfolio. Now, how would I protect myself from this position? How would I hedge it? I'm going to touch base this on a minute. So let's go for Lawrence here. Morgan Stanley is targeting parity. Okay, first of all, Morgan Stanley is targeting parity. Wow. Okay. Okay. Well, that may be something, man, to be honest. We're on top of a range. Okay. It only broke once. It was a fake break. Okay. So, tum 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 tum. Maybe. Don't know. But that would be a very sharp move, because MUFG is already targeting on first quarter. So if we look at the first quarter would be, oh, they don't have it. Oh, there you go. The first quarter would be until here. All right, so they're saying that until here, we're going to do this whole move down and whole move up again. That would be very interesting to see. Anyways, I'm not saying that it won't happen. And the CD is targeting 104 during Q1 2024. 104, yeah, 104, it's more likely. Okay, more likely, I would say 104, more likely. Now, if it goes to parity, that's a very good question. Yeah, they can also be wrong. I'm not saying that they will be correct. That's true. Who is MUFG? Well, MUFG is a bank, basically their institution. So this is basically who they are. Okay, so they are a bank, and they have really good people working for them. PhD people and those kinds of stuff, and they have the market. So they have the macro analysis, they have Forex analysis, they have rates analysis, and they have credit analysis as well, commodities. And if you want to know the team, these are them. So this guy, G4 for exchange, this one foreign exchange G10 and emerging markets, this one FX market G10, and so on, so on. So they're really good people working on the best, I would say, to do to deliver it to us. Okay. Anyways, so just if you guys, I will share this website later. So if you guys want to, have a read on all of these texts, this would be very, very good for you guys. Okay. This would be very, very good. Anyways, coming back now for the charts, let's go for pound dollar. Oh, actually, let's talk about gold already. Okay, what a crazy movie here, hey? What a crazy movie. Lots of things happening. Okay, lots of things happening. So pretty much this movie here, let me put it up on, let's say, 15 minutes. Everything was fine until Monday opens. Okay. We can see here that exactly at 10:15, we did had a move on gold over $100, over $100 of move. Okay, well, kind of 100, but in percentage, it moved basically 3.54% in 30 minutes. Actually 45 minutes. Okay, so what basically happened here? Well, first thing, historically, whenever it got hit all-time high, it also did go down move. Might be possible this time. Yes, that's exactly what I want to talk about. So what basically happened on here is we did had I don't know if you guys are aware of this. All right, the Red Sea and what is basically happening there. Okay, so free shipped was attacked in the Red Sea, and US is involved on that. Okay, so US dollar is involved on that. All right. Of course, if something happens, let's say a war happens and US is on the middle, you don't want to be long on gold. And of course, you want all of your money, most probably, on safe assets like gold. Sorry, guys. Like safe havens, like gold and other commodities. Okay. So there you are. So tensions was escalating, and then this basically happened. But it was short-lived because, as our friend Amin said, hit at an all-time high, and then most of the times gold hits an all-time high, he goes down. Okay. And if we can check here on, let's say, 1 hour, we are already, have this huge move in 1 hour, and now we are retracing back. Where could we go? Well, looking here, we may have, this little box here getting hit very, very soon. Okay. As well as this, oopsie, where is it? I was looking at this afternoon. Oh no, that was this one. Yeah. Basically, for now, only have this target here on gold. Okay. So if we see, oopsie, if we see gap around 1930, 1940, 1930, 1940, let's have a look. $19.40. Okay. Sorry, 1830, 1840. Okay, we corrected that. 18. Okay. Oof, that's big. Let me put it in 4 hours. Okay. Look, if your strategy, looks around those numbers, that would be a fantastic trade. I'm more playing conservative at gold at the moment, so I'm just going for this move, and then we see how it goes. Let's see if MUFG has a target for gold. No, they don't. Okay, that's not a problem. Anyways, just bear in mind we do have a little target on gold on here first, and then we see how we go later. Okay, so just broke down here again. It's all lining up to long on US dollar for this week and next week. So if we look at euro dollar again, it's starting to pick it up a fast movement momentum to the downside. And if we look if we look gold, it is starting as well to pick it up a move to the downside. So we may have opportunities here on the short side of gold as well as euro dollar. Okay. What else? USD JPY. USD JPY, very interesting. Okay, very, very interesting. JPY is very weak, as we know. Okay. But US dollar, it is kind of weak as well. I'm not saying that US dollar is, strong currency. It's not. As we can see on the US dollar index, it is going down. Okay. So if further escalations happens on the Red Sea, definitely we will have an even weaker US dollar and a stronger gold and a stronger Australian dollar, Swiss franc, and so on. Okay, so just bear in mind for this, JPY needs major policy shift to be stronger. That's correct. Japanese yen definitely needs a tweak on the monetary policy. The YCC, the yield curve control, is tilted, all right, and they need to how can I say, not fix, but the main thing is they need higher inflation. So they're waiting for inflation to pick up on Japan. That is not happening. All right. So if it doesn't happen, we will continue to have a very weak Japanese yen for who knows when they will try to tweak this yield curve control. But falling on USD JPY, funny enough, but MUFG has a short position. I'm not gonna find it right now to show you guys, but just believe me, they have a short position, and the short position is if I remember, is somewhere around here. Okay, and the target is somewhere around 142. So here. Okay, so this is pretty much day trade. Okay, look, do I think it will go down forever? I don't think so. Oh yeah, funny you asked this question. I was just touching base on this. Do you see JPY current moves as downward trend or as just a retracement? I guess it's more a retracement. Okay, I was talking to a friend. His name is Alex. Well, he's not my friend. He's my colleague, I would say. And he's from London, and he runs a convertible bonds as well as emerging markets and G10 and G8 currencies hedge fund there. I know it's a huge name, but it is what it is. He's a very, very skilled trader. If you guys want to follow him on Instagram, he's Dedication Forex. He's a very nice guy, very nice guy. He was talking about USD JPY at 170. All right, 170. When he told me that, I was like, what? Oh, I even have it here, 170. All right, I was like, all right, are you sure you didn't mean any wrong number here? He was like, no, I mean 174. Quite a bit of time, of course, not tomorrow, not next week, not next year, maybe 5 years. But this may be looking as a retracement. Where will this retracement stop? That's definitely a good question. He's long since 110. Okay, he has been long on USD JPY since 110, and he's holding his position until 170. So that's pretty much what he told me. So looking at now, as USD JPY all-time high was around 350. Was it? Not quite sure. Sorry, don't know. Yeah, it's not gonna load. Anyways, yeah, but yeah, 350. That's a really good. So basically, it's retracement right now in 150. Anyways, so will this continue forever? Sorry, when this retracement, stop and then we revert it to an uptrend again? Most probably next year, if we don't have any changes on the monetary policy from Japan, all right, from the Bank of Japan. If we do have changes on the monetary policy, then it's a completely different game, okay, because Japanese yen will be strong, and most of the money will be going to Japan, okay? So just bear in mind that I will do an analysis for you guys. If you guys really want to do, I always try to bring it down the words and everything. But if you guys want to really, really know how I would, analyze it as an institutional trader, I can definitely send to you guys some text on the Telegram. But bear in mind, it will be a lot of text. So just let me know if you really want it or not, and then we can discuss this another time. Anyways, so for me, USD JPY would be this. Okay. Next, let's talk about where is it? GBP USD. Where is it? Oh, here. GBP USD. Okay. Daily chart here. We were having a up move here. Okay, so let's go for 4 hours. But again, the same thing is happening. All right, we are consolidating. Okay, here we are consolidating. Okay, and we hit it up the first target. All right, now we may be coming back towards somewhere here first, and then if all goes well, somewhere here. All right, so just bear in mind, we may have a weaker pound. We may have a weaker pound. Okay, we may be looking, you know, to lower on GBP USD. Again, most probably they will say that it's higher for next year. Yeah, 26.30, 27, 28.70, and 29.50. So they're looking somewhere around here, 29.50. Okay, for next year. But this is a 4-hour chart. Okay, this is a 4-hour chart. Just let me show you something. So from here to here, it's nothing. All right, it's nothing. It's basically this little move here. It won't happen. It won't happen like that. So we need basically retracements. All right, and probably we may have a retracement. If we get let's say 118. Yeah, 118. Yeah, I know. Yeah, that's a really good trade. I'm most looking to that area as well. Anyway, so if we just take Fibonacci here, you know, and do this, we just hit it at 61.8%, and we may be heading down now. Okay, just so you guys bear in mind with that. All right, 118, just let me dot plot this here. 118, there you go. All right, so just bear in mind, we may go lower. Now, I've talked about euro dollar, USD JPY, GBP USD, gold. I've talked about the US dollar as well. I want to talk about something that this is something. Right. We are very close to the last meeting of the Federal Reserve, FOMC. Okay. Very close. Only 8 days, 11 hours, 20 minutes, and some seconds. All right. So will this be the most important event of the year? Definitely not. All right. Definitely won't. Why? Well, I'll show you. Only 2.5% of the market is expecting a hike now. 97.5% of the market is expecting a pause. And if we go and look at the yields, where is my trading view? Here. We have lower yields. 10 years, 2 years, lower yields as well. Okay, so just bear in mind, lower yields, 2 years, 10 years, dollar down, you know, this is most probably right. We want to have another hike. As I was right for today on the IBA, hopefully I'm going to get this one right as well. Okay. If we look at the dot plot, where is the dot plot? Here, chart. We've passed the peak already for 2023. So, and most of the members was expecting somewhere between 5.5 to 5.75, let's say. Okay, and right now we are at 5.25, 5.50. All right, we are on that range. Okay, so it's pretty much done. Okay, pretty much done, because look at here. We only have 1, 2, 3 above there, but we have 3, 6, 9 on the 5.5, 5, sorry, 5, 5.25, 5.5. Okay, so most probably the Fed is done. It won't be hiking again. But what's going to be important is if this continues like that, you know, if the current target rate continues like that, then yeah, okay, if they pause it, it will be widely expected, but not priced in. Actually, I would say it is priced in because of the yields are very, very low. The 10, the 2. What about the 30? Let me have a look on the 30. Oh yeah, definitely it's priced in. Yep, it is it is priced in. So market expectations are very high on a pause. We do have priced in from the bonds. Now, what is the most important thing? Of course, the FOMC speech. So yes, that's what I'm going to talk about next, Lawrence. So the importance right now is the speech. What Powell will say for next year, and if he, you know, if he give us some hints towards it, that's going to be such a nice gift for Christmas, you know. Because let's have a look on the next meeting from 13th of December. They already have a 31st of January meeting, another pause. Okay, so expecting another pause. All right, 83% of the market expecting a pause. In March, now it's a little bit more tilted to a cut. All right, 25 basis point cut. 52.4% the market is expecting a cut on March. All right, you guys following me here? 1st of May, they're expecting a pause. All right, but on the 12th of June, they're already expecting another cut. All right, so that's 50 already. Okay, 31st, pause again, another cut. That's 75 basis point. And then here, well, that's half, let's call it even. And then December, expecting another cut. All right. So pretty much we're expecting between 50 to 75 basis point rate cuts for 2024. Few institutions have been talking about 124 basis point. I've mentioned that on my video today on YouTube. I'm not quite sure where they got those figures, but wow, if you know 124 basis point, mate, this is a lot. I don't think they will do that. I think the economy is not ready to not suffer, but you know, take these as it is. We need to see much more improvement for US. Okay. So this is just the last thing I want to talk to you guys. Now, I want to show a few data. Okay, so let's go and see the commitments of traders as usual. I will do the second part of the video. So if you guys haven't watched my video yet on how to do commitments of traders, let me show you videos here. So go on and watch. It's very, very nice. Okay, and you guys can actually build your own commitments of traders. So watch the video. Very nice video. I go step by step. So basically how to download the data, you know, opening up the data, getting on the spreadsheet, you know, following up the steps, getting ready, and then building up your own code, all right, your own data. So very nice. Hopefully you guys can watch and learn something. Okay, lots of people already. Hey Matthew, you there? Lots of people already watching, giving us thumbs up, so that's really good. Okay, now let's go for here. What's happening on the commitments of traders? For those who don't know what's commitment of traders, I see some new faces around here. Commitments of traders is basically a report that is released by the BLS, the Bureau of Labor Statistics, and the CFTC, the Commodity Futures Trading Commissions. And basically what they do is they collect. Well, first of all, when you're a big player, when you have lots of money and you're playing around in the market, after a certain amount of money, after a certain amount of capital, you need to report these positions that you're taking or you getting off or liquidating or whatever to the CFTC, and they get this data, collect this data and give us to the public. So basically, leverage funds, hedge funds, pension funds, managements, and all of those guys, they need to report. So this is basically positions from hedge funds and so on. Of course, is the futures. So the futures is actually every single currency. Okay, so let's have a look here on the Australian dollar first. Let me zoom in. Okie dokie. Australian dollar. From last time to now, we didn't have much. So we only had from -6 to -5.5. Okay, not much changes on here, but it's still negative. Canadian dollar, sorry, from -18 to -17. So not much changes. Japanese yen, well, it's a good change because we've been there twice. All right, so 2 weeks forward, we have been -23, and then now they're -25. So that's a very bad for Japanese yen. New Zealand dollar, big increase on short positions, right? -5.5 to -8.8. So this is pretty much a good opportunity to short New Zealand dollar, continuations on short positions, as well as the Japanese yen. Okay, here not much changes, and here not much changes as well. Now looking up at the next ones, let me scroll this to the side. Okay, there you go. Getting my pen again. Now, looking up at the CHF. Okay, CHF, we do have a few things happening here, where we got off from -3.3 to all the way to -7.5. So that's a big drop. That's a big short positions getting placed on there, right? We have 17 short positions from 13. We have 17 now, all right? On euro, we did had, so this is not pissing me off, but it is pissing me off at the same time. They haven't changed anything since like 10th October. Yeah, since October they haven't changed it much. All right, so pretty much they are building some positions, but very small positions along. Okay, they are basically -0.1, 0.6, 1.3, 0.8, 0.8, 1, 1.1, 1.4. So not much to look at here. GBP, yes, see how they are unfolding the long positions. See, 6.3, 3, 1.4. Maybe next week we have a flip. All right, and if we have a flip, we just confirm the view for the Goldman Sachs looking for 1.18 on GBP USD. Okay, so and then if we look at the US dollar, we did had a massive increase on long positions. All right, from 15 to 19 and from 19 to 32.8. This is huge. This is huge. And this is basically another good opportunity, again, to look at shorts on euro dollar, to look at shorts on GBP USD, as we've been talking about. Okay. So that's pretty much it from my side. Do you guys have any questions, or is it all good? I'm gonna send again the Telegram group. So if you guys, if maybe you're not there, you can just join it completely free. Please join there, guys. Any questions, guys? No, that's awesome. Good to be back. I wasn't that much prepared, to be honest, but good to be here with you guys. Good to see that you guys liked it. really happy. Okie dokie. Okay, all good, no questions. So then you guys can wait for this week. I'm going to send my JPY view that I've been talking to my friend Alex. We've made a little, let's say, analysis for you guys. All right, enjoy your week. Have all a blessed week, and we see you next week, Tuesday. All right, guys, bye-bye.